You have paid your premiums on time every single month. You have a life insurance policy in place. You have ticked all the boxes. As far as you're concerned, your family is taken care of. But here's the question nobody asks. Does your nominee actually know what to do when the time comes? Are they aware of the term insurance claim process? Does he or she know which insurance company to call? Do they know what documents to collect? And within how many days? Do they know who your claim officer is? Or where your original policy document is kept? If the answer to any of those questions is no, this video is exactly what you and your nominee need to watch. Because buying a policy is step 1. Making sure your family can actually claim it is step 2. And most people never get to the step 2. Stay with me till the end. We're going to walk through the entire claim process, every document your nominee will need, and what you as a policyholder must do today so your family never has to figure this out alone. A term insurance claim is a formal request made by the nominee or beneficiary of a policy to receive the death benefit amount after the policyholder passes away during the policy term. There are two main types of claim under a term insurance policy. The first is a death claim. This is the core benefit when the life insured passes away during the active policy period. The nominee files for a claim. It doesn't matter whether the death is natural due to illness or accident. Each type follows the same basic claim process but with different document requirements, which we'll cover in detail. The second type is a rider claim. Riders are optional add-ons that you can attach to your base term policy. Common examples include an accidental death benefit rider, a critical illness rider, or a waiver of premium rider. If you have these riders and the triggering event occurs, such as an accident or a critical illness diagnosis, your nominee can file a rider claim on top of the base death claim. This means the family can receive an additional payout beyond the base sum assured. Both claim types follow a structured process. Let's go through it step by step. The first step is filing a term insurance claim is formally notifying the insurance company that the policyholder has passed away. This should be done as early as possible. Earlier is always better. Delays in intimation can slow down the entire settlement process. The intimation can be done in multiple ways by calling the insurer's toll-free helpline, by visiting the nearest branch in person, through the insurer's official website, or even via email. At the time of intimation, you will need to share 3 key details: the cause of death, the date of death, and your relationship to the policyholder. If you are an ABSLI policyholder, you can reach out the claims team at 1-800-270-7000. That's a toll-free number available to all policyholders. You can also initiate the process online through the ABSLI website. Once you intimate your insurer, they will guide you on the next step, the document submission. This is the section to screenshot or note down because the document list varies depending on the cause of death. Let's start with the mandatory documents, which are required for every claim, regardless of how the death occurred. The nominee will need a claimant statement form, which is the duly filed claim form from the insurance company. Then a death certificate, the original issued by the municipal or Gram Panchayat authority. KYC documents of the beneficiary, meaning the person filing the claim include Aadhaar, PAN, and a photograph, and finally, a cancelled check or bank account details for the payout. Now, if the claim is being filed within 3 years of the policy being issued, there are additional requirements. The insurer will typically ask for the original policy document, a medical attendance certificate if available, and hospital or treatment records self-attested. If the death was due to illness, the insurer will need the complete hospitalization records, the death summary issued by the hospital, which details the treatment history, root cause of death, attending doctors, and the KYC documents of the policyholder as well. If the death was accidental, road, rail, or otherwise, the document list expands further. You will need the FIR and the final police closure report, a medical legal certificate, which is mandatory. Without this, accidental claims cannot be processed. A post-mortem report, if one was conducted, a driving license, if the policyholder was driving at the time, valid vehicle insurance documents in case of a road accident, and a newspaper cutting if available as supporting evidence. One important practical note: submit complete documents, not partial ones. Incomplete submissions are one of the most common reasons claims get delayed. And always collect a written acknowledgement from the insurer when you hand over your documents, especially if any originals are included. Let's address the fear that most people carry about term insurance. What if the claim gets rejected? Claims do get rejected, but in the large majority of cases, rejections are avoidable and they almost always come down to something the policyholder did at the time of application, not something the nominees does at the time of claim. Here are the most common reasons and what you can do about each one right now. The first incorrect personal details is a mismatch in age, date of birth, address, or income declared at the time of buying the policy. Even an honest error can trigger a rejection. So if you bought your policy some time ago, go back and verify that your date of birth, income, and addresses are correctly recorded. The second is non-disclosure of medical history. If the policyholder had a pre-existing condition that was not disclosed at the time of application and the death is linked to that condition, the insurer can reject the claim. Full transparency at the time of application is not optional. It is what protects your family later. The third is policy lapse due to non-payment of premium. If premiums were not paid and the policy lapsed, there is no valid cover. Set up an auto debit or standing instruction for your term premium. This is one payment you cannot afford to miss. The fourth is policy exclusions. Every term policy has specific exclusions listed in the document. Events, circumstances under which no claim will be paid. Read these carefully. Understand what is covered and what is not before you need it. The fifth is incorrect occupation or lifestyle information. If you changed careers and moved to a higher risk profession, or if there's a mismatch in how your occupation was declared, this can affect your claim. Update your insurer if your circumstances change significantly. Under IRDAI regulation, an insurer shall settle death claims within 15 days for cases that do not require investigation from the date all required documents are received. In cases that require investigation, such as accidental deaths or complex claim scenarios, the settlement timeline can extend up to 45 days. This is a structured process to ensure every claim is assessed fairly and thoroughly. Here's what most people don't know. If the insurer delays beyond the stipulated time, without valid reason, they are required to pay interest on the claim amount as a penalty. Your rights as a nominee are protected by law. If the claim isn't resolved as per the IRDAI guidelines, you have the right to escalate first to the insurer's grievance cell and then to the IRDAI if needed. The single biggest factor in claim speed is document completeness. Every missing paper adds time. Every incomplete form adds a query. This is why preparing in advance before anything happens is the smartest thing a policyholder can do. If you're watching this as a policyholder, this section is for you. Term insurance works only if your nominee knows it exists, knows where to find the documents, and knows who to call. If any of those three things are missing, the benefit you have been paying for may never reach your family. Here's what to do right now. First, tell your nominee explicitly that you have a term policy, the company name, the policy number, and the sum assured. Second, store your original policy document in a place your nominee knows about, such as a physical file at home or a shared digital folder. Third, write your agent's contact number directly on the policy document or in a place your family can find it. Your agent is the person who can guide you and your family through the entire claim process when they are not in the right headspace to figure it out alone. And fourth, if you don't yet have a term plan that your family can rely on, now is the time. With Aditya Birla Sun Life Insurance, you get a variety of term insurance plans to choose from, with flexible payout options and a claims process supported by a dedicated team. The link is in the description below. Do check it out. Before you close this video, do one thing. Wherever your policy document is right now, pull it out, find the nominee's name on it, and make sure that person knows the policy exists. That one action is as vital as any financial plan you'll ever make. Before we end this video, here are the questions we get asked the most about term insurance claim process. If you're thinking about any of these right now, you are not alone. Let me answer them. How does term insurance payout work after death in India? What does the nominee actually need to do? The nominee needs to intimate the insurer as soon as possible. They then submit the required documents: the original policy document, death certificate, their own ID and address proof, and bank account details. The insurer reviews the claim and if everything is in order, transfers the full sum assured directly to the nominee's bank account. IRDAI regulations require this to happen within 30 days of receiving all documents. How do I know if my insurer is trustworthy? Check the claim settlement ratio. It is the percentage of claims an insurer paid out versus the total claims it received in a year. A CSR of 98% means 98 out of 100 families received their payout. IRDAI publishes this data for every life insurer every year. For 2025-26, ABSLI's individual CSR stands at 98.86% as per the IRDAI annual report. Screenshot this checklist and save it where your nominee can find it. This is the document that could save your family weeks of confusion. If you found this video useful, please share it with at least one person who has a term plan. They need to watch this too. And if you want to understand how ABSLI's term plans work, including the claim settlement process, click the link in the description box below. Subscribe to this channel for more videos on insurance, financial planning, and everything you need to make the right decisions for your family.